The Money Show with Bruce Whitfield is brought to you by Absa Commercial Property Finance, breaking ground with ambitious innovations to develop a bright future for Africa. That's Africanacity. Absa registered FSP.
The Money Show.
Personal Finance with Warren Ingram.
Personal Finance brought to you by Discovery Bank, the future of banking. Now, Warren Ingram is an executive director at Galileo Capital. He's a personal financial advisor. Tonight, how you should treat Bitcoin and other cryptocurrencies. With reverence, with respect, or with disdain, or with an acquisition mindset, I wonder, Warren Ingram. Where are you going with this?
Well, I think the first point is you should treat it as either as a very dangerous weapon or a very dangerous tool. You know, it can be useful and it can be extremely destructive to your wealth. I think the interesting thing for me is that as the story carries on, the Bitcoin story, and I guess just maybe in general the whole cryptocurrency story, we need to understand that none of us have a clue how the movie ends. You know, we're not looking at an asset like a share where we can say, well, you know, we can do a valuation and it looks, you know, radically overvalued and we should sell because, you know, we can make a huge profit and let it fall again and buy in or something like that, or a bond or a property. This is something that is just by definition completely new. And I think the world is trying to understand it. You know, we've got the believers that would say that this is the alternative to all, you know, currencies around the world, and it's the way that the world must move. And then you've got people on the other side saying, on the other side of the argument, I should say, saying that this is, you know, just another thing that will be, you know, speculated like tulips and you know, all sorts of crazy, not scams, but just bubbles that have burst in the past. And you know, watch out. You know, the more you follow this, and the bigger the price gets, the more likely you're going to burn your fingers. And the reality is, we don't know. None of us actually know. You know, this feels a heck of a lot to me like the IT bubble in, you know, the late 1990s when, you know, we were told that the internet was going to change the way that we do business. And, you know, the believers were right. You know, they were absolutely right. A business like Amazon changed the world, and, you know, Take a Lot in South Africa certainly has changed the world. But they were 10 years too early. And the early investors in the whole internet story, you know, those investors lost a heck of a lot of money, and most of the businesses then don't exist. And so this might be one of those stories. We just don't know.
The trouble with hype cycles, Warren, is that I first learned about Bitcoin when it was at $1. And I went, pfft. If I'd just taken $100, which at the time at 10 to 1 was 1,000 rand, and I had bought 100 Bitcoin and had not looked at them again until recently, my 100 Bitcoin would be worth an awful lot of money. What's that, $6 million or thereabouts? We'd be having a very different conversation today, but I didn't. And I just wonder whether or not, and here's my thinking on this, whether Bitcoin, which has gone from 1 to 60,000 in about 10 years, can do a 60,000 times growth again over the next 10 years. And I think basic mathematics tells you that is quite unlikely.
Unlikely and not impossible. And I think the immediate sort of counter argument I've got in my head while you're you know, putting that scenario out is, if it can do that, we've seen Bitcoin lose 80% of its value in a very short space of time. And so, you know, $60,000 can you know, become a few dollars again. And that's the thing, is we're dealing with something that should be treated very carefully. And the fact that the bubble, if it's a bubble, the fact that the bubble gets bigger and carries on longer is possibly the most dangerous aspect of this, because it lures more and more people in. And you know, this thing of, you know, the FOMO of, you know, the fear of missing out just builds, you know, it builds pressure. And I always think, you know, I don't really mind the scenario you've discussed now, because I mean we've had this conversation many times, and I still don't mind losing profits. What really bothers me is when I actually make an investment and it really loses me a lot of money. It would bother me much more to have put, you know, 100,000 rand in and it's now worth 20,000 rand. Because that was a decision I took that wasn't necessary. and I've realized a loss. Whereas, if you miss out on a profit, that's fine. Lots of great investors miss out on profits all the time. The trick is not to miss out on profits. The trick is not to realize big losses. And I think that's the issue with something like Bitcoin. And there are people, I've met a few, that haven't just done case studies and scenarios. I've seen what they've done with their Bitcoins, the Bitcoin speculation, and they've made a heck of a lot of money. And the smartest ones to me are people that look at this and they say, I'll put money in on day one that I can absolutely afford to lose. And when it doubles, I'll take half the money out and I'll let it carry on. And if it doubles again, I'll take half the money out and I'll let it carry on. And so I think, to me, if you are going to take a punt, and that's what I feel it is a punt. I don't think you can put a valuation on this and say, here's a calculated investment analysis story. You're taking a punt. And if you're going to take a punt, do it with money you can afford to lose, all of it. And if it goes incredibly well done, congratulations. But then make sure that you start taking profits out of that so that you don't experience that, let's say $10 million down to $1 kind of a ride, which could happen. The regulators are looking at cryptocurrencies very carefully. And I think if it poses a threat to their system, to the system that they have entrenched now, regulators are very quick to regulate a threat to the system completely out of existence. They've done it lots of times in the past, and I wouldn't be surprised if they did something like that again.
Or at least try to do so. At least try to do so. That is the point. They may fail because the crypto happens in the blockchain and it happens in a world that regulators are often very slow to adapt to. And so that is, they'll try. There's no doubt they'll try. The question is whether or not they'll succeed.
Well, I think the one thing is to go from, let's just say, that ecosystem, the cryptocurrency ecosystem. The day you want to convert that to a meaningful amount of money or value to buy, let's say, a house. At some point you need to convert those, let's say, your Bitcoins to your Camps Bay mansion. Now, that's where the regulator will catch the system, because at some point, they're going to say, well, where's this money come from? You've got to prove your source of wealth. You've got to prove the source of funds. So it won't pass the FICA test, for example. And I think that's the big issue here, is that it might be an extremely valuable form of transaction, and the whole blockchain technology is a totally different, has totally different values for many different businesses. But when it's anonymous, that's a threat to lots of things. For example, anonymous currency is a great place for drug smugglers, people smugglers, terrorists, all of that, all the criminals. I guess a lot of our maybe ex-corrupt politicians, or ex-politicians who are corrupt, I should say. Where's their store of wealth now? And so the moment they want to convert that into something real, tangible, that will be where the regulators will catch them and stop them out. So that's my concern. If you had to kind of posit a really negative scenario, and as I said at the start, I don't know how this movie ends, but I do think it is starting to evolve. A lot of people are looking at this and saying, okay, well, we can launch an exchange traded fund that tracks a basket of cryptocurrencies. And so now you're finding that the crypto is crossing over into mainstream financial services, and that's interesting. And a lot of people saying, maybe this is the new form of gold. Maybe this is the way that we have a store of value that's unrelated to other countries, governments, economies, and it will perform when we're concerned about those those kind of more mainstream economic factors. And it won't perform when the world is going well and markets are doing well and people aren't so fearful. That might be the Bitcoin story in the future. That, to me, it's becoming the most possible outcome. But to your point, can it go from $60,000 to $600,000 in the next year? I think it's unlikely.
Yeah, and the question here is: do you sit on the sidelines and allow patience to run its course? Because invariably, assets like this, when they rise as fast as it has, at some point, enough people start getting worried or greedy or panicky to start selling, and it pulls back. Maybe it goes from 60 to 50, 50 to 40, 40 to 30 to 20. I don't know where it goes. But at some point, your risk tolerance kicks in and you go, I wasn't willing to pay 60, but actually I'm willing to pay 20, or I'm only willing to pay 5. And you wait on the sidelines waiting for it to go to 5. If it doesn't go to 5, well, it didn't. And did you really miss out? If it does, well, then you can buy a lot more. And maybe that's the point. You got to pick your entry point as with any other asset, whether it be a share, a commodity, or anything.
Well, the difficulty for me, listening to that scenario, which is a lot of really sensible investors are in that boat. The thing for me is still, how do I calculate this value? What do I actually own at the end of the day? Even with gold, which is another thing I don't like. Gold doesn't generate dividends or rent or interest. When it's not going well, all you've got is a holding cost. If you hold it in a vault or wherever you hold it, it's only costing you money unless it's really performing. And to me, even with gold, at least it's a physical thing. I can actually put it in a truck, I can move it somewhere, and I can give it to a bank and tell them to give me $5 for it if that's all it's worth one day. But if Bitcoin really does collapse and it goes to that scenario of being regulated out of existence, if you go in at your $5,000 level, you've got 5,000 times zero. You've got zero.
Yeah. No. I get you, Warren. Okay, Warren is being circumspect and responsible because he's the advisor and he doesn't buy it. He's not buying Bitcoin. And he doesn't buy the logic, and he doesn't buy it either. And also, there are about 8,000 of these things, and there are new ones being created each and every single day. And I just, I don't know where I would begin to think about getting involved. A question from Brenda. I need you to give you a moment to think about it. Brenda's been keeping an emergency fund in a savings account. Well done, Brenda. But Brenda is not happy with the interest that Brenda is earning, and stock markets are doing so much better than cash. Should Brenda use that fund to get some share exposure for her emergency fund? That's Brenda's question. You have a moment to think about it, Warren Ingram, and we'll get back with an answer in a moment.
The Money Show.
Personal Finance with Warren Ingram.
So, Warren Ingram, the question from Brenda, can she stop investing in cash? It's boring the living daylights out of her because her interest rate is not as high as it used to be, and Brenda would like to get some share price exposure instead.
The important point there is that the cash has a job, and that job is to be the emergency fund. And so, it's an interesting question because it's coming up, increasingly as interest rates have come down. This wasn't really a question we were being asked, 2-3 years ago when interest rates were nice and high and the stock market was, going down or sideways for years on end. Lots of people were very happy to have cash in an emergency fund and other cash investments as well. And now that we can hear these ads saying earn 4% on your interest, suddenly that doesn't sound so attractive anymore. And I think it's important to understand the role of the money before you make the investment decision. So in this instance, your emergency fund is really there to protect you in the day that something goes really horribly wrong. And you don't have other means to fund yourself from some expense that just wasn't planned, that you just couldn't foresee. And of course, COVID has taught us that, that's a reality for all of us right around the world. And in an instance like that, if you had taken your emergency fund, gone out of cash, put it in the stock market, and let's say the stock market, did what it did in March 2020. You suddenly lose, potentially a third of your capital that you've got in your emergency fund, and the point of the emergency fund was to help you for the bad times, and now you've lost a third of that money for no reason other than the stock market's gone down. It could put you in real trouble, and suddenly you're now potentially out of a job because that was the emergency that you had. You need to embrace debt now because your emergency fund isn't big enough to cover you for 3 or 4 or 5 months worth of your expenses.
Just remember the purpose. The purpose of the fund. The fund is not there to earn you money. The fund is there as an insurance policy. And unfortunately, insurance costs money. And in this case, it's a very clear example of that.
Yeah, and what it is doing is giving you actually a little bit of money. So it's the one instance where it's self-insurance, and at least you're making a little bit of money. It's pathetic. I'm not saying it's great money, but the reality is it's something that you are self-insuring. You're not paying insurance companies a fortune. You're not paying banks massive interest on debt. You're putting yourself on the path to your financial freedom, and that's what the job of this emergency fund is. It's not there as an investment.
Okay, final question for you this evening, and it's a phrase, a word of the week. ESG. What is ESG? ESP used to be extrasensory perception and was a perfume, but I don't think ESG is nearly so sexy. Or is it?
No, it's not. It's much more valuable though. So it stands for environmental, social, and corporate governance, or just governance, and really it's about people imposing values, their personal values, or their corporate values, or their pension fund values on the way that their money gets invested. So, I guess we don't have to debate whether climate change is a concept. I think we're living in climate change now, and so the E from that is around the environmental issues. So a lot of the time now we're seeing banks, for example, saying we will no longer fund coal mines. We will no longer fund fossil fuels. And that's exactly the impact of environmental, the environmental part of ESG. And then social deals with things like human rights, consumer protection, even animal welfare and things like child labor in countries that are not your own or in your own country. And then the last is corporate governance. And I think South Africans must be incredibly sensitive to this. This is something we've lived with for the last decade of really mismanagement, both of our parastatals, our government, and other companies that we've seen just blowing up through terrible governance. So ESG is a thing. It's real. It's gaining enormous traction right around the world. And I think we'll see this evolve, where pension funds and big fund managers will be forcing companies to actually start to take these issues much more seriously. And, people that maybe are in their 50s or 60s would not have thought about things like this, but watch, people in their late 20s, early 30s. This is one of the most important criteria to them when they make an investment decision is, does it align with my personal values? And I think, we all have to take this seriously. It is a big theme and something that will grow in power over time.
Thank you. Warren Ingram at Galileo Capital. Warren is a personal financial advisor and director at Galileo Capital.
The Money Show with Bruce Whitfield was brought to you by Absa Commercial Property Finance, developing great opportunities with world-class funding innovation. That's Africanacity. Absa is a registered FSP.